TCF. Oh, baby. It's earnings day. Tattooed Chef earnings are out. I listened to the conference call. I've looked over all the numbers. I've had time to digest the information. And I've had time to prep this video because this is going to be a beast of a video here, okay? We got to talk about what's going on with the chef, what is good, what is bad. Whenever I look over an earnings report for one of the companies I personally have stock in, right? Especially, a massive position like I have in the chef. I have to always look at these things objectively. I have to call the bad and the good, and kind of go through all this and kind of figure out, do I need to reevaluate? Do I need to buy this stock even heavier? Do I need to sell this stock? Do I need to buy less aggressively and all those sorts of things? And so, this is a beast of a video, guys. Hope you enjoyed this. As always, we got a lot to get into in this video. Now, before we get into all the numbers, the conference call, the details, there's a lot of things that were announced that kind of went on the DL that I think are very important here. Before we get into all that, we got to talk about the stock price of the chef and kind of the setup. Let's call it that. And the setup was very bad going into these earnings, okay? You don't usually want to see this. So basically, this is a 5-day chart of the chef. The stock is up 22% in the past 5 days, the past 5 trading days. You don't usually want to see that. And the reason being is if you have a stock that goes beast mode prior to earnings, usually you're kind of setting yourself up for failure. And unless a company comes out and absolutely obliterates numbers, you're set up in a situation where you're almost guaranteed to go down. On the flip side, and I explained this with Palantir stock earlier today, on the flip side, if you have a stock that, let's say, is just selling off, let's say it's down 22% in the past 5 trading days, all that stock has to come out with is something not horrible and not disastrous, and the stock price goes up. And you see that many times, and this frustrates a lot of people. This same exact phenomenon just happened in a stock. And this is one of the reasons Tattooed Chef stock is up 22% in the past 5 trading days. This just happened with Beyond Meat stock. So Beyond Meat, the stock had been just in a very bad place for quite a while, right? Hadn't been doing anything, just selling off. And basically, Beyond Meat came out with a horrible quarter, but the stock went up a ton. It went from like $30 to $40. And this is what happens in the stock market. If you come in and your stock price is already pricing in devastation, and you come in with something that's not devastation, you could actually see your stock price go up even if your earnings are bad. And it's an interesting phenomenon in the market. It frustrates a lot of people, but those setups are very important if you're thinking about where a stock price goes, at least short term. A stock I worry about is Honest. So Honest is honestly going beast mode. In the past 5 trading days, the stock's up almost 19%. They have earnings coming out on Friday. So I don't like the setup there. I really don't. Now, for me as a long-term investor, am I going to go sell my shares? No. I don't ever make a decision like that because I'm in this for the long term. I'm in this for the next several years. So, if it goes down, I'll likely buy more shares. But, at the same time, I can't deny the fact that now they're putting themselves, because the stock price is setting up for a very difficult kind of earnings, and they have to come in and tear it up as far as numbers go to get everybody really excited in order for that stock price to continue going up. And it's a difficult thing, especially in this operating environment. Like if you've seen this earnings season, we've got a lot of earnings that just are barely beats. Not too exciting. Like if you saw big tech earnings, most of those companies barely beat numbers. Some numbers even missed. They weren't like, oh my gosh, they're just tearing it up, right? That's not the earnings season we're kind of in right now in this sort of, let's call it wall of worry and everything that's going on out there, okay? Now, this was important. This came out, and basically, this came out right basically at the same time the earnings call came out. So, as the earnings report came out, Tattooed Chef announces $40 million credit facility. Basically, through UMB Financial Corporation, the credit facility was increased to $40 million from $25 million and has a 3-year term set to mature in September of 2025. The prior facility, also with UMB, was scheduled to mature in September of 2023. Tattooed Chef expects to use the credit facility for general corporate purposes, which may include funding of acquisitions, capital improvement projects, and internal growth initiatives. Quote, "We are very pleased to extend our long-standing relationship with UMB and appreciate the continued support of our business and vision," said Sam Galletti, President and CEO of Tattooed Chef. "This expanded and extended credit facility significantly enhances our liquidity and our runway and provides us with financial flexibility to execute our balanced and multi-pronged capital allocation strategy." I put this here, better to be safe than sorry. In terms of either raising capital or just having capital around a credit facility like that. It's important, especially when you're a money-losing company. You want to have things like this in place. You don't ever want to be in a situation where you're desperate and you don't have this set up ahead of time, essentially. Because if you have to wait till last minute to do a credit facility or a capital raise or whatever, right? You almost always put yourself in a very bad position. So this is, in my opinion, a great decision by Sam and the management team there to get out in front of this, get that credit facility there. Every single, big company out there is loaded up on debt for the most part. Like, it's very rare you find a company that basically has no debt. Apple has, something like 150, maybe even $200 billion in debt now at this point. So, when it comes to corporations, and every single food company pretty much you'll ever find just about has a lot of debt. And so, this is an industry where if you can get the debt at fairly low interest rates and you can make a much better ROI on that, it makes sense, right? And when you're a money-losing company, like the Chef has been, right? They're expecting profitability at the end of 23, and we'll talk about that. They reiterated that today. But still, just because you're expecting that doesn't mean you shouldn't put yourself in a position that if case that doesn't come, you're in a strong position, right? And it also gets away a lot of the liquidity worries and things like that, which I think is very, very important, obviously for the stock and for shareholders and things like that, right? Now, the setup for the Chef in regards to these earnings was, we were told basically on the last earnings call, do not expect margin expansion in Q2. Do not expect any major cash flow improvement in Q2. Expect all that type of stuff in Q3, Q4, and 2023. And we also heard management team last quarter say, expect 280 to 285 revenue for full year 2022. Okay, so that was a setup going into this. And I think that's very important. So everybody's expectations were in certain places. So you didn't have people expecting that margins were going to magically be in a great place this quarter, or cash flow was going to be at some crazy place this quarter. No one expected that going in. Okay, so the expectations were, as management said. And I was thinking going into this earnings, I was thinking about what the revenue numbers alone could have been if it wasn't for all the outs we see all the time, right? This is from a Target in Columbus, Ohio. I mean, look at this. This is just outs everywhere. Because the problem is that the Chef, they get on store shelves and it sells ridiculously fast. They have pretty much the highest velocities, you're going to find from a frozen food company out there. It's insane. They hit the shelves and it's gone. I mean, completely gone. And then the problem is the store shelves sit vacant for quite some time until the next shipment comes in. And I just think about all that time, all the days and weeks where these products aren't there that they could be selling through. And I think about what the revenue numbers will be when they actually get caught up and are actually able to fill all this demand that we constantly see out there, right? This one's from a Target very recently, August 5th. I mean, it's just, there's outs everywhere. The whole cooler is just out, right? And other companies, they have plenty of product, but they don't sell the sort of velocities a Chef sells at. And the good news is, long term, the Chef will be on store shelves, and stores like Target and whatnot will order a lot more product because they're oh my gosh, our whole freezer door is gone, right? And with some of these other companies, you don't have to order that much because they don't move like that. But with the Chef, dude, they're moving volume, and you need to order way more. And so I think about the next year numbers in 23, I think about 24, and I think about how much these retailers are going to need to order because the product just sells through so dang fast, and the product just sits vacant, right? This is from a store somebody put in the private group from New Jersey, right? I mean, look at all the silver. That's all Chef. All these Chef outs all over the place, right? I mean, it's just huge revenue missed opportunities. And let's say all these products were filled as they should be, right? Because if you want to go buy a Tattooed Chef product, it should be there on the store shelves. I mean, I don't know. Maybe we're missing out on $10 million a quarter, $20 million a quarter, $5 million a quarter. It's hard to, kind of run the numbers there. This is from a Henderson, Nevada store here. I mean, look at the outs. It's outs everywhere because the product hits store shelves. This is from a Cape Coral Publix that somebody took a picture of here. Out. It's what you see across the board because the sell-throughs are absolutely ridiculous, okay? So that's a short-term problem, though. That will be fixed long-term. Retailers will order a lot more product, and the Chef will be there in the future. And so that's the only good news. The bad news is it obviously hurts numbers in the short term, okay? So net revenue came in at 15.6% rise year over year. That is a miss. Analysts were expecting 64. So that's a bad thing there. And literally, I think about all these store shelves being empty because the product just sells through. And I'm like, dude, I think they could have crushed numbers. Like literally they could have crushed analyst numbers by just having the dang product in stock, in my personal opinion. Once again, that's not Chef's problem. That's retailers just not ordering enough and just not understanding, right? And their algorithms like, oh, this product moves because it's basing the volume off of what other frozen food products sell at. And it's like these other ones just don't sell like the Chef sells, okay? Tattooed Chef branded product net revenue is up to 58.4%. That should continue to increase. And I mean, over time, that should even, in my opinion, because basically Chef has branded products and then they have some non-branded products. That's their old historical business. Let's just call it that. In my opinion, this number is going to 90% plus over the next few years because that's where their focus is, okay? Net loss came in at a massive $26.4 million number. That is not something we want to see, but it's something we expected to see. Adjusted EBITDA came in at a loss of $20.5 million. So big bad numbers there, okay? So not exciting, but that's what we expected, right? They added more than 35,000 new points of distribution during the quarter of 2022, the second quarter of 2022, strengthened brand presence in traditional grocery stores, which is very key. You can't be a player and, just being in Target and Sam's Club and Costco and places like that. You got to be in all the big grocery stores, right? They integrated a new 45,000 square foot Tattooed Chef operated a cold storage facility that I know Stephanie said that could save them around $2 million roughly there, which I think is very important. They completed the first run of Tattooed Chef refrigerated plant-based oat butter bars at the Belmont facility, which is very key. We'll talk about that later in this video. They increased capacity and streamlined production process at the New Mexico Foods Distributors facility. They completed construction of new in-house food, a safety laboratory in Paramount facility. Here's the deal, man. The Chef has so much going on because they did several acquisitions. They got new products coming out. All that stuff is very expensive. I mean, very expensive. When you are doing all these things all at once, right? It is very costly. It's going to hurt your margins. It's going to hurt your profitability. It's going to hurt your cash flows. However, you're doing all that so you have a much bigger long-term opportunity. And we've seen this story play out so many times with great growth companies where they have to spend like crazy up front and people call them, they're incinerating their money essentially. They're burning cash. They're burning cash, man. And they're just running through it. And their margins are in a bad place and their cash flow is in a bad place. But when you get this sort of revenue opportunity, you got this sort of brand like the Chef does that just sells like nobody's business, right? And you got a company that is innovative, you've got to go through the tough times. And the quarter like this is a kitchen sink quarter, I call it, where it's just the worst of the worst, and it only gets better from here, and that's only good news. It only gets better from here, but it's annoying to have to spend all that money up front, but it's either that or you lag way back and you hurt your long-term growth rates and your long-term opportunity by not spending up front like that, right? We continue to increase revenue year over year, expanded our channel presence, and elevated the Tattooed Chef brand, all while investing in strategic capacity to strengthen our position as a premier, fully integrated, value-added plant-based food company, said Sam Galletti, President and CEO. During the second quarter of 2022, we introduced more than 30 new products, invested in targeted sales and marketing campaign that is attracting new consumers while driving sales and expanding our retail presence in approximately 17,200 retail locations across the country. We generated a 15.6% increase in sales versus the second quarter of 2021 and remain on the path to profitability. We are confident that we can achieve positive adjusted EBITDA by the end of 2023. That is key, okay? Because obviously, Tattooed Chef is known as just a money burner, right? They're just burning money left and right, right? And yeah, they're growing revenue and they're growing and their sell-through's great and they're getting in all these stores, but they're burning money. So this line is very, very key. And Sam reiterated that on the conference call as well, which was very key. We continue to increase household awareness and introduce new consumers into the plant-based world, said Sarah Galletti, Tattooed Chef's creative chief officer. Our nostalgic innovation combined with what the Tattooed Chef brand stands for is attracting new valuable consumers into retail freezer aisle for our partners. That's very key as well. Obviously these retailers got to get results, and there's no one's going to get you better results than the Chef in this category. We are confident that this trend will continue and expand into the refrigerated and ambient aisles with broad availability of our plant-based and oat butter bars and our dairy and grain-free chips later this year and into early 2023. And they also said that, obviously, if you understand like ambient, that's non-refrigerated, non-freezer items, like the margins you make on those products is night and day better than freezer products. Freezer products, I mean, it's just so much more difficult to make great margins on freezer products than ambient. So if you're talking about the margin story, that's a big component of that, but that's just one of many components of that. And I don't know how many of you guys saw this, but if you follow Tattooed Chef Foods on Instagram, essentially, they were showing this off. That they're basically sampling their products at, I think it was a big concert venue in Chicago, some festival, I believe it was in Chicago, and they were showing off the products, the new tortilla chips, so I can't wait to get my hands on that. We're going to have to wait at least a few more months before we can get our hands on that, but that's just a massive, massive opportunity. And if they sell through anywhere close to the sell-through they've had in the freezer category, oh my gosh, man. I mean, the money they're going to make from that is just going to be ridiculous. I'm extremely excited to try these as well, these oat butter bars. I mean, I think this is a pretty darn big opportunity for the company as well with these plant-based bars. I don't know if it's as big as necessarily the chip opportunity. I think that's a whole other growth opportunity there, but I think this is pretty darn exciting as well, and that's another new category they're launching into, okay? So it's very, very exciting. Revenue increased 15.6% to $58.1 million in the second quarter from $50.3 million at the same time last year. Tattooed Chef branded products reflect an approximate $6 million reduction in club sales year over year due to the timing of promotions in 2021 versus 2022. Excluding this impact, branded product sales in 2022 second quarter increased 21.4% from the 2021 second quarter. That is key, okay? That's absolutely key, because if you don't know essentially how like Club Channel works, and when we're talking about Club Channel, we're talking about Sam's Club and we're talking about Costco. Essentially, at a given moment, they could just order a huge bulk amount because they got some sort of promotion going on with you, right? And so Tattooed Chef did not have that benefit this year. They had that benefit last year, right? And so, from my understanding, the relationship between Sam's Club, Costco, and the chef is very, very strong, and the chef usually sells through incredibly well. So we should see the Club Channel build back much stronger again. But obviously, I think also, and they didn't say this is just my opinion, I think they were probably giving a little more preferential treatment to some of the new grocers they got into and things like that versus a Club Channel, which is already an established channel, right? So that's just kind of my opinion on that. They didn't say that. That's just, my 2 cents, right? Cost of goods sold increased 36.7%, that is ugly, to $57.4 million in the second quarter from $42 million in the second quarter of 2021. While the increase in cost of goods sold was driven by higher sales volume, inflationary pressures continued during the 2022 second quarter. With an unprecedented rise in supply chain costs, including food, packaging, freight, and logistics, freight on finished goods was roughly $6.7 million and equates to roughly 11.5% of total revenue this quarter. The company believes that these cost increases will over time be mitigated by a variety of internal initiatives, including the commencement of operations of our dedicated cold storage facility, enterprise-wide equipment upgrades, and automation currently underway, increased capacity utilization, and the benefits of vertical integration, they say, okay? So, yeah, I mean, there's so many things that are going to help Tattooed Chef's margins and profitability and cash flow over the next, let's just call it 4 to 8 quarters. It's a lot, okay? That's going to be going for them paused. They have so much working against them the past several quarters. It's been ridiculous, okay? Gross profit is $0.7 million, which is nothing. In the second quarter of 2022, that's 1.3% of revenue compared to 8.3 mil. The decline in gross margin was due to the above reference increase in cost of goods sold. And you might say, why doesn't the chef just increase the price of their product, right? Like all the other food and drink companies are doing. We'll talk about that in just a minute because that's a very key thing that came out on the conference call. Operating expenses increased 48.3% in the second quarter from $16.4 million. Sales channel expansion, corporate functions, and support of public company reporting requirements there. Net loss came in at a whopping $26.4 million compared to a net loss of $57.5 million in the same quarter last year, okay? So less of a net loss, but still a huge number, okay? And we've got to make great strides there over the next several quarters, okay? Financial condition, the company has $27.7 million of cash on the balance sheet, which I think is important. Their long-term debt was approximately $1.4 million. Net cash used for operating activities in the second quarter came in at $23.7 million. This is a very, and this is all very, very important, right? Basically, the company, as far as the cash consumed from working capital activities as accounts receivable, generated $14.4 $16.4 million, which was fully offset by cash consumed by inventory, which was abnormally high due to supply chain challenges and our decision to ensure product availability for our customers, which still needs a lot of work. Prepaid, and that once again, it's probably not the chef's problem, it's more of a retail problem. Prepaid expenses and current liabilities. Capital expenditures in the second quarter of 2022 came in at $6.8 million and primarily reflected the purchase of new automated manufacturing equipment, the installation of the new chip line, and construction of in-house laboratory in Paramount. Prepaid marketing activities totaled $15.8 mil in the second quarter. So, you're prepaying for all these marketing dollars you're going to, essentially spend out there. But that's a huge number, man. Almost $16 million cash outlay for that in the second quarter of 2022 there. That's a big, big number, okay? And so, yeah, that's, like I said, it's a kitchen sink type quarter, and it only gets better from here, and that's the good news, okay? Now, for the full year outlook, this is pretty encouraging. They reiterated that revenue is going to come in between 280 and 285 mil, unchanged from the prior guidance, which means they're expecting a pretty darn strong second half of this year, okay? Pretty darn strong, and that's good news. Gross margin, not good news, coming in at 8 to 10% for the year, down from the prior guidance of 10 to 12%, right? Marketing expenses expected to come in at 27 to 32 mil. But here's the deal. Marketing expenses in the first 6 months of 2022 came in at 17.5 mil, which means they're not going to spend as much in the back half of the year as they did the front half of the year, which is definitely good news there, okay? This is more good news. Capital expenditures are expected to come in at about $20 million, with investments focused on automation and robotics at our manufacturing facilities, unchanged from prior guidance. Capital expenditures for the first 6 months of 2022 came in at 15.6 mil. So here's the deal. They've already done the bulk of capital expenditure spending, okay? And so this is very key if you're thinking about cash outlays for this company. They've already done the bulk of advertising expenses in the front half of the year in terms of their equipment and all that stuff. The bulk of that's been spent. So that's why I call it a kitchen sink quarter, and it only literally gets better from here. And this is why we're going to see improvements in cash flows and profitability and margin, everything across the board, because they have done so much in the front half of this year, and they've had so much working against this company in the front half of this year. It's ridiculous, okay? Now, look at this line item. So now we're looking at their balance sheet, okay? They've got $32 million in accounts receivable that's out there, okay? Pay up. Like, whoever owes the chef money, pay up, baby, okay? Pay up. We got to come see you. That's all I got to say about that, okay? That's a lot of money. 32 mil? Jeez. So basically, what this means is if this was all to be paid out today, let's say, for instance, which is not happening, but let's say, all these retailers and distribution companies all paid the chef out today, the chef would have $32 million more in their bank account than they do, essentially. So that's a big number there, okay? Property, plant, and equipment, they're up to almost $58 million in property, plant, and equipment now, which is obviously, this is a company that's going to grow into a $500 million revenue company and then $1 billion plus revenue company. When you're talking about those sorts of numbers, you better have, enough facilities to make that happen, right? And so that's very, very important there. Accounts payable came in at only about a little over $2 million increase there. So obviously accounts receivable is up much, much more than a little over 2 mil there, okay? Which I think is very, very important, right? Now, conference call wise, okay? So, 7 core, very important pieces. Sam said he's very confident the company's getting into a path to profitability by the end of 2023. He says he can see it. That's good news, okay? Number 2, they're doing this is very key, okay? And this came out in the conference call. They're doing a low double-digit price increase very soon. Now, if you're wondering why didn't the chef already increase prices? We see all the other food and drink companies. Here's the deal, okay? And they said this in the conference call, and this is why conference calls are very important to listen to. They just got on all these retailers, right? The last thing you want to do when you're just building a relationship is you get into retail and right away you're like, hey, we gotta jack up the price, right? If you're Coca-Cola, if you're Pepsi, if you're Conagra Foods and Healthy Choice or whatever, right? You've got a relationship that's built for years and potentially decades. It's no problem for you to go up in price. But when you're a new guy on the block and you just get in the retailers and then you're like, oh yeah, we're going up in price, it's not the best look. So it's unfortunate timing for the chef. But now they're comfortable enough, and now they got the sell-through in these retailers, and the retailers realize, oh man, the chef's the real deal, Holyfield. They're moving crazy volumes here. So now the chef's in a place where they can do this low double-digit price increase. So rather than just do a slight increase and then a slight increase, they're doing a low double-digit price increase, which I think is very, very important. Every other food and drink company in the world is going up on price. Why shouldn't the chef, right? And so this is obviously going to help the chef's margins in a big way. It's hurt the chef's margins by not increasing price because everything for the chef's business model has gotten substantially more expensive, but they didn't go up on customers, okay? They're finally going to do it. That's going to make not only revenues look better, but that's going to make margins look much better for this company, right? Number 3, they got a new major distribution deal, they said on the call, coming soon. My guess is, they did not announce that. They said, at some point that news will come out and they'll release it. In my opinion, it's likely one of 2 companies. It's either Walmart, they're getting big distribution into Walmart because they have a very limited presence in Walmart right now. Or my other thought is Kroger, okay? Walmart, they have a great relationship there because Sam's Club, and they move crazy volumes at Sam's Club when they're, really like pushing product into Sam's Club, okay? But Kroger, they have a few different SKUs in Kroger, and they're selling through unbelievable. But they're going to have 30, 40, 50 SKUs in Kroger stores, in my opinion, over the next few years. Right now, they've got, in many of these Kroger stores, like 3 to 6, maybe 8. So they got a lot of expansion there. So in my opinion, it's likely one of those 2. Who knows? Maybe it's somebody else. But yeah, they talked about it's a new major deal. So I'm thinking it's one of those 2 guys, okay? They also said they got the chip launch coming at the end of 2022, beginning of 23. Like I said, that's going to be beautiful margins. Like chips, you want to talk about one of the most profitable food-related items you can sell chips, okay? There's a reason Pepsi bought Frito-Lay a long time ago. That's a money maker, man, and I mean a big money maker. Number 5, oat butter bars are coming at the end of 2022, beginning of 23. That's exciting. I think that's huge, man. I think that's really big. I don't think it's as big as a chip launch, but I think it's just another touch point in stores that get people interested and then go try other items that the chef has, right? Then, like I said, the chef has a vision to become a food giant. And that's exactly what I envision this company is going to become over time, okay? They also have margin and gross profit margin expansion expected as this year goes throughout, and free cash flow to a much healthier place over the coming quarters as well, okay? So overall, I look at all this, right? And it's kind of what I expected. This is in my opinion, the bottom when it comes to the chef's business model and just being in a tough place. And it only gets better from here. We're going to see not only revenue go up quite substantially and likely reaccelerate now quarter over quarter, but we're also going to see margins improve quarter after quarter. We're going to see free cash flow improve. We're going to see the bottom line improve, okay? Now, if we don't see that over the next several quarters, I'm going to be very worried, okay? That would cause me to pause a little bit. But as long as we see this play out, and I'm confident that's going to play out, it's a great feeling to know you're past the really tough times, and it only gets better from here and here and here. And so, we'll see how everything translates. The next 2 quarters are vital for the chef, because not only are all the current shareholders looking at this and they want to see margins start to improve, they want to see free cash flow start to improve, and the losses get less and all those things, but also there's a lot of people that watch this stock on the sideline, and those people are like, I'm not touching this baby until I see the margins start coming around and improving and start to see that loss get less and less and the free cash flow get in a much better place, right? And so, the next 2 quarters are everything for the chef. And I mean absolutely everything. So, I'm confident that everything's going to play out over these next several quarters, but we'll see. And obviously, I'll be here to keep you guys in the know as far as everything that's going on there. So, hope you guys enjoyed this beast of a video. As always, I have 2 free stock market courses. If you'd like to check out those will be pinned comment down there. You'll be able to get on the phone with somebody high up from my team and actually be able to talk to them. And they'll ask you a few questions and either put you in. There's a more beginner course, and there's one that's a little more advanced. You don't have to join my private stock group to get access to those. It's absolutely free. So if you want to check that out, check out pinned comment down there, and they'll get you enrolled in one of those. Much love as always, and have a great day.